Hello. Welcome to Option Bank, your premier options trading platform. We are sure you have heard of the word safe haven asset, but do you know what it is or which asset can be considered a safe haven? Well, safe haven is an investment that is expected to retain or even increase its value in the event of a market crash. Investors seek for safe havens in times of market turbulence, which may stem from the economic system itself or from political uncertainties such as votes, referendums, wars or conflicts, in order to protect their investment or even make profit when other instruments such as stocks or currencies are riding a plunge and at risk of becoming worthless. So, what are considered safe havens? Historically, gold has been one of the safest places to preserve wealth and is typically considered a safe haven when markets are volatile. Although the prices of gold do experience ups and downs throughout the trading history, its value never dropped to zero. Unlike other investments such as fiat currencies or other assets bearing credit risk, gold will never be at risk of becoming worthless. Government bonds such as United States Treasury bills or German bonds also appear to show safe haven properties. Those are considered safe haven assets even in a tumultuous economic climate because they are backed by the full faith and credit of the US and the German governments. In the foreign exchange market, the Japanese yen, the Swiss franc and the US dollar are considered safe haven currencies. The yen has earned this sobriquet due to its low interest rates, high trade surplus versus its debt, its large amount of foreign bonds as well as its historic stability. Firstly, Japan has been the leader when it comes to low interest rates, as the country has been attempting to stave off deflation and spur economic growth. Negative interest rates in Japan spur traders across the world to execute carry trade. Investors would borrow yen, which is in a low interest rate environment, to buy foreign currencies or invest higher yielding assets from other countries. As for the mechanics, traders using this strategy attempt to capture the difference in the interest rates of the two countries as long as the exchange rate between the currencies does not change. During bouts of financial market volatility, investors would de-risk by shedding riskier foreign investments and cover their short positions in yen, which makes the currency strengthen. Secondly, Japan has always been a large exporter and has continually exported significantly more goods and services than it imports. The result has been decades of current account surpluses that have positioned Japan as a net creditor to the world. The value of foreign assets held by Japanese investors is substantially higher than the value of Japanese assets owned by foreign investors. According to data released by the US Treasury Department on December 15, 2016, Japan moved past China to become the largest non-US holder of American government debt with the value of $1.131 trillion. Those features also shared by the Swiss franc, often considered another haven currency. The Swiss franc is considered as a safe haven for investors also because of the stability of the Swiss government and its financial system. In addition to the fact that Switzerland is seemingly resilient to recessions, the country has also been famous for its political neutrality that has seen it avoid any sort of conflict since 1815. The US dollar has traditionally been the default safe haven currency when the global outlook is less than positive. Besides the fact that the US dollar accounts for about 40% of all daily forex transactions, most of the world's monetary systems have been tied to the US dollar due to the Bretton Woods system and dollarization. Other countries have thus been compelled to purchase dollars for their foreign exchange reserves, denominate their commodities in dollars for foreign trade, or even use dollars domestically, thus buoying the currency's value. While traditional safe haven assets may provide some protection for your investments in times of economic and financial strife, they all currently carry risk. Why is that? Let's find out in the next video. Thank you for watching.